So our first panel today is Payments Infrastructure as a Roadmap for Reimagining Africa's Business Ecosystem. And this is building on several conversations we had yesterday about what is required for us to foster more intra-Africa trade. And the moderator for today's panel is Alice Usanase. She is Head, Country Relations and Equity Mobilization for the Africa Finance Corporation. Thank you so much, Alice.
Good morning, everyone. Thank you so much for joining us this morning. As the chair of the Africa Soft Power mentioned, yesterday was quite an insightful day. We discussed parity. We discussed the future of work, especially showcasing women in leadership. And we thought today we'll go deeper and pick some of our curated aspects of what we see as next growth of industry on the continent. When we think and talk about inter-trade, when we talk about Africa Continental Trade Agreement, that cannot materialize if we do not resolve payment across regions, across countries as well. So that's why today we have an exciting panel that covers the different parts of the system that will hopefully allow us to be able to unlock the challenges that can materialize the FTA agreement. Please join me welcoming my first panelist, who's Mr. Rewhaoma Iche-Akarolo, who's the Special Advisor to the Deputy Governor, particularly with insight in data analytics. My second panelist is Mr. Zano Mataruka. He's the IFC resident for Uganda and Rwanda, and particularly his experiences not only in Asia, Europe, and Latin America. So when it comes to intertrade across region, I think he's definitely the right person for us to have today. We are also joined by Mrs. Mapula Bodibe, the CEO of MTN Rwanda. Mrs. Mapula has been at the fabric of the growth of MTN across the 17 years. So she's been leading all the efforts regarding consumer growth in MTN South Africa, as a Chief also Marketing Officer in Uganda, and now as the CEO of Rwanda. My last panelist, but not the least, is Mr. Babatunde Olofin, who's the Managing Director of Moniepoint. Mr. Babatunde's experience has been really at the forefront of digital banking. He was leading the Innovation Lab at First Bank. He was also leading the digital banking at the First Merchant Bank in Nigeria before he became the CEO of Moniepoint. Thank you so much for joining us this morning. So going through straight the topic of today, as we were saying earlier, payment, fintech is really reshaping how we trade every day, how we exchange, particularly today as we're going to be speaking about fashion and creatives. I think most of the people in Rwanda are going to be wearing Nigerian outfits that are made in Lagos, that are made in Abuja. Some are going to be wearing outfits from South Africa. And we're able to do that just most of the time through Instagram, through Visa payment. So today, as we see an increase in internet connectivity, more than 40% Africans now have access to internet. And that has driven a technology growth. And that kind of technology growth has really materialized into the surge of fintech. Last year, more than $150 billion was transacted and processed through fintech platform. So that kind of innovation is really showing us how the future of the continent in terms of intra-trade, in terms of trade development is going to be reshaped. So it's really important for us to understand what has been the trend, what's the future of the industry, and how collectively in our different industries we can really support that growth. So I'll maybe start with Mr. Rewhaoma, particularly because this cannot happen without a cohesive regulatory environment. Nigeria has been at the center in terms of attracting not only FDI investment in the fintech space, but also in terms of actually skills development. What has been the journey for Nigeria, particularly in creating an environment that drives innovation in the space? And when that is in place, how do you really balance financial stability, and also payment infrastructure.
Thank you for having me. I would like to share the Nigerian experience. For a viable payment system to be in place, you have to introduce very clear regulatory frameworks, guidelines, lay out the field, the do's and don'ts of what you expect the fintechs or the players to do. At the same time, you also try to introduce policies that do not hinder innovation. You recall that from the beginning, payment was solely driven by banks and bankers. But with the growth in technology, introduction of different applications and software, we gradually saw the influx of IT-savvy persons coming into play who were not necessarily bankers. So a central bank has that challenge of introducing the balance as non-professional bankers come into a field that has hitherto been played by bankers. Guidelines have to be very clear and unambiguous. And one of the first things that comes to mind for a central bank is the stability of the financial system. You want to be sure that there's a level playing field for players. You want to be sure that consumers of services are safe and protected. You know that to open a bank account ordinarily, you almost have to go bring your blood work and your DNA. We need to know who you are. We need to know where you live, where you work, and all of that. Most of our underbanked and underserved people look at the banking infrastructure, and it's quite intimidating, you know. But with the emergence of these savvy persons in the space, making banking on the go, we have been able to bring in a lot of people into the space. Now, in Nigeria, to drive financial inclusion, we had to lower some of the identity-related issues. So, for instance, you have people in the rural areas without, say, proper identification or proper address. And we said, okay, if you can get someone to identify you, we can allow you to have an account at a particular level. We call it tier 1. So for a tier 1 account, we say there's a limit to which you can transact. Because you also have to bear in mind the issue of AML-related issues, moving money across the space. But you also want to extend financial inclusion. With that, we've been able to onboard a lot of underserved people into the financial system. But over time, we've grown from about 53% excluded. Now we're looking at about 75% included. That is now 25% excluded. With that growth, you realize that having a very lax system in terms of identification is really not necessary anymore. So now we've upgraded it. In Nigeria, for you to transact in that space, you need to have what we call a national identity number and or a bank verification number. And with these numbers, actually, we have your DNA. It's a bit of a challenge for most players in the payment system, especially those outside the conventional banks, when they have to document so many things for their customers. Because, I mean, somebody says, I want to make a payment. I just want to make a transfer. Why do I have to give you all of this information? The central bank guidelines over time have been amended in such a way that we try not to discourage these fintechs that make the payment easier, and at the same time trying to protect the system so that you don't enable people who we do not know to make payments through the system. So it's kind of been a balance, like you said, making the system stable and at the same time encouraging development in that space. But we've been on it now for probably the last 12, 13 years, working on this digital platform to improve payments. I'll stop here for now. Thank you.
Thank you so much. And I think there was a a few critical points that you mentioned that probably will align with some of the questions we'll ask Babatunde to come in. But before I ask Babatunde to join us, before fintech, before startup, there was telecoms. That was the first way of how we approach money exchanging for national inclusion. What has been, Mrs. Mapula, what has been the role of telecommunication industry in driving payment infrastructure across the continent?
Good morning, and thanks for the question. I think first and foremost, one of the fundamental things you need is connectivity. And I think most of the last few years have been focusing on ensuring that we have ubiquitous connectivity. Of course, it's a hygiene, but it's a very critical enabler for the ecosystem to thrive. One of the things we are focusing on is now ensuring speed, because with the advent of applications, etc., there's a lot of demand for real-time, immediate payments to be made and so forth. And you can imagine the dependency for the financial ecosystem to function with a real-time access to technology. So connectivity is the first one. I'm going to talk about 7 elements. The second one, which we so often take for granted, is a mobile phone. It's interesting. I mean, this year marks almost 50 years since the first phone was introduced in terms of a mobile phone. But to this date, we still have a population that is not enabled on a mobile phone. I mean, in Rwanda, I think we've done well. We're sitting right now at about 92% mobile phone access. But I mean, I'll tell you a story. When I first arrived in Rwanda, I traveled to one of the regions, just visiting different of our service centers. And one of the most startling experiences I had, I saw one of our customers with a SIM card in an envelope. They had come into the service center and they were coming to withdraw cash. So they gave the agent behind the counter the SIM card, who then knew exactly what to do, put the SIM card in their own phone, did the transaction, gave the customer cash, and then the customer was able to leave. What did the customer need? A phone. So it's a memory that stuck in my mind, but it sort of set the tone for how I've been thinking about the work that we need to do in Rwanda. So fundamental access to mobile phones, never mind smartphones. So those are the 2 pillars that would ensure that from an infrastructure perspective, we have the ability to support the payment infrastructure. The third one, which is quite, I think, the most important when you think about the capabilities, it's really the platform itself. We have a mobile platform that currently works across 16 out of the MTN 18 operations. It's enabled by one of our partners, but it's the IP and the technology that enables for cash payments in and out, as well as the ability to send and receive, all of that capability. Now, one of the visions for MTN is that we want by 2025 to have 200 million mobile money users out of the 300 million customers we have. I mean, that's quite a bold ambition, but the outlook is that when you have 18 countries on the continent connected by a single platform, you can imagine the possibilities when it comes to remittances, as well as sort of cross-country payments ecosystem. So over time, sort of that's the outlook that we have. So the ecosystem itself is really about being innovative, making sure that we integrate to different other financial system services, as well as very, very importantly, having security. I think we know that right now, digital identity has become one of the biggest risk factors when it comes to cybersecurity, because when people have your digital identity, they can do so much. So the system must be secure. So we are investing a lot to make sure that the platform we have is secure, reliable, so that our customers can have the peace of mind that knows that if I put my money into that platform, I actually have the security of knowing that my funds will be well taken care of. So that's the third factor. The fourth one, it's a very rudimentary one, but USSD. Some of you may be using smartphone, you might have forgotten about USSD. USSD is the most basic and most rudimentary digital service that today is fueling access to mobile money systems across not just Rwanda, but across the continent. And why it's unique is that it does not need a it is not enabled by digital infrastructure such as broadband and so forth. Any user, as long as you have a mobile phone, you can use USSD. It's the most rudimentary. And how you see its impact is that today, out of our 7.5 million customers, we have 5.2 million using mobile money, and all of them have access to USSD. On the other hand, only half of them have access to the internet. So you find that the technology, as rudimentary as it has been, has allowed a much more wider access, to the service. Of course, when you have a smartphone, you have a lot more sophistication. You are able to expand your use cases. You are able to have a lot more sort of advanced technologies. But fundamentally, today, we are so happy that just with the basics of a USSD platform as a form of infrastructure, we are able to ensure that people are able to access our financial ecosystem. And I think the great thing is that it also comes in different languages. In Rwanda, the local language is the most predominant. We have more than 80% of people who prefer that language and therefore are able to transact. So that's the fourth component. I would say the fifth component, which is sometimes, it's an infrastructure component, but it's also a physical component, because what it does, if you've driven around Kigali, you would have seen a very wide distribution of agents. They have yellow jackets. Some of you might have seen them. And that agent network is basically the bridge, because what they do is they take in the cash that allows for the ecosystem to thrive. Because without the agent network, you don't have a way to take deposits. So they are daily taking 68 million transactions in Rwanda that allow for the ecosystem to thrive. And once the money is in the ecosystem, the money is able to fuel the payments. And which brings me to my next one, which is merchants. I think we have the advantage in Rwanda of working within a regulatory framework that actually promotes and propels payments very aggressively. And when you go to any retail touch point in the country, you will find a mobile money payments sort of portal, or if it's not a portal, it would be like a signage. What that means is that anybody coming into that environment is able to use mobile money to make payments. And today we have 430,000 touch points like that. And our outlook is to get to 1 million, to make sure that every retail touch point in the country, including, basically the service sector, has that access. I think one of the exciting things is that over time, right now it's very, manual. You put in your number, but that number is that merchant's unique identification. Over time, we've been piloting, innovations such as QR codes, where instead of putting in a number, you can just tap and, scan and pay. So those are some of the things we're looking at. But what I will share with you is that Rwanda is a smaller market in our group. However, when it comes to mobile money payments, we actually have the highest penetration. One, in terms of users. We have 2.8 million people who are making payments. And this is higher than any other country in our group, despite our small size. And that just gives you the sense of how, when you have, the industry really partnering very seamlessly with the regulator, you can actually propel a very thriving mobile money payments ecosystem. We have over 500 billion francs of transactions passing through that ecosystem every day. So we're quite proud of it. Right now, we actually have a team from MTN Liberia who's come to learn about how we are getting it right. So really, the merchant as well as agents ecosystem, which are physical presence around the country, allow us to keep that going. So, and then lastly, I mentioned, innovations such as QR codes, innovations such as applications, I think give us a lot wider scope for what we can do. Because as soon as you have innovations such as applications, you are able to cross beyond the country. As soon as a customer has an application, be it a Visa app, etc., they are able to transact through their mobile money account. So really, I think we've really got quite a very well developed industry when it comes to infrastructure that has enabled our payments ecosystem. But the outlook is quite positive in terms of what we have still to bring. And yeah, it's something that we feel privileged to be in a market that really aggressively drives that ambition.
And I think to what you mentioned in particular is really mobile access was probably also at the core of the drive and the growth that you're also referring particularly for Rwanda. And I think when we talk about cohesive environment, there was also a very driven program to facilitate access to mobile that the government of Rwanda has been putting in place, having a partnership with the likes of like Marathons, to be able to provide easier access and cheaper access to funds, especially at the country size level as well. Babatunde, coming to you, Moniepoint has really changed the SME financing space in Nigeria. It's a space that many have tried, and it's a space that many have failed. And I think one of the core aspects that have been your competitive advantages has been how to use data analytics to understand consumer behaviors, consumer preferences, and trends. But at the same time, as we all know, and not just for Nigeria, KYC, money laundering processing, when it comes to SMEs, really, we have very, very little data. So how have you managed to unlock that space in terms of knowing your customer and, making sure that you attract a category that is able to pay back to you?
Thank you very much. In Africa, right, when you have your parents in the house, you don't misbehave, right? I want to greet my parents around.
We know who's your parent to the panel.
Exactly.
The Central Bank of Nigeria.
I'm not going to misbehave. I will just go straight to the point. All right. No matter how small the business you run, right, there is always a footprint of data somewhere, right? It may not come in the form that you can easily take an informed decision on, right? It can come in an unstructured format, but the ability to put the data together and make meaningful decisions out of it is what makes you a great player in the industry. As Moniepoint, we started out as a payment company in Nigeria, where we helped the country in doing a lot of financial inclusion and also banking small businesses. When we started out, we were not a bank, but we were helping businesses in collections and payment, right? So we had over 1 million POS out there that we gave to small businesses who never had a chance to be incorporated into the financial services sector, right? Mainly, these are small businesses that have been ignored by normal banks, right? So we came into the industry, helped them with collections by giving them POS terminals. If you do business that gives you like 10,000 naira, that's less than $30, right? In a week, we will give you POS terminal for you to be able to do collection. And we also give you a mobile app that you could use to do payment. So when you collect, and the money comes into your account, we give you the POS terminal for you to make payments to your vendors and the likes. All right. So we started out with that, and we acquired lots of businesses to the point that we had over 2 million businesses banking with us. And in that process, we learned and we saw the pattern of how these guys transact, right? Before we give you a POS terminal, we will, of course, KYC you, right? Know who you are, the principles behind the business, what kind of business you run, right? Now, that's on the collection side. Now, on the other side, we also learned about your transaction pattern. Who do you pay, right? Who are your merchants? Who are your vendors? Who supplies you? Now, putting this data together, we also understand the fact that these guys will need something around credit, right? Now, because we know who you are, and we know what you do, and we know the kind of volume and value that you command, it was very easy for us to put that data together and went to our parents and asked for a license to be able to help these businesses with credit. And that was how we got at least a banking license to be able to do that. We started out that, and we started lending to these businesses. This also grew our business because you had more merchants who came to us and started banking with us. Today, we ramped over $12 billion transaction on a daily basis in terms of the transaction that goes through our payment system. And we've also helped a lot of businesses to grow in terms of credit and payment. We're coming up with some other things so that we can have a full ecosystem of how to help businesses to grow, right? Remember I said we started out with collections, helping them to collect. We went into payment. We started lending to them. And the final leg that we are coming up with is something that we call a business tool that can also help them in managing their businesses in terms of inventory management, invoicing, and the likes.
Thank you so much, Babatunde. So we discussed systems, we discussed infrastructure, we discussed connectivity. All that come together for them to be sustainable, the issue of scalability. So in the context, Zano, if you allow me, in the context of the African Free Trade Continental Agreement, the whole purpose is really how we can push African countries to trade more, either at the cross-border trade level, but even across regions. But the fundamental issue comes around settlement, payment settlement. In the context of AFTA, there is the PAPS, the Pan-African Payment Settlement plan that was launched with the African Union, Afreximbank, and AFTA. How do you see such initiative in really unlocking settlement with the different currencies we have across the continent? And with IFC being present in more than 40 countries on the continent, what role have you been playing to really unlock that space?
Thanks very much, Alice, for that question. And before I answer your question, let me first of all thank the chair as well as Nkiru for yet another successful Africa Soft Power Summit. With that said, to me, PAPS is honestly a game changer. Game changer in what way? A number of reasons. We all know that Africa is a continent of 50 countries, highly fragmented. And what PAPS is seeking to do is to really facilitate the AfCFTA through the creation of a unified market. So with PAPS, what you are now having, or what you are going to have, is let's say a young woman who's into creative industry here in Kigali, being able to sell their product to somebody in Egypt in a cost-effective way with immediate settlement in the local currency. And the reverse happens when they want to buy something from Nigeria. PAPS would allow for that. So what I find very unique about PAPS is that it's facilitated inclusiveness, it enables cost efficiency, and it also enables the integration of Africa into truly a unified market. Before PAPS was set up, there were a number of regional initiatives. I know there was an initiative in West Africa, there was an initiative in Southern Africa, the Southern Africa RTGS, there was also an initiative of in East Africa. But this is the first truly Africa-wide initiative, which has got a potential to really transform our continent. And, I don't know if, I was talking to two young people before we started, and they were saying, look, what advice can you give? And I said, I wish I was your age, because when I was your age, and I think my colleague here would relate, we're all busy just about reading books. But what has happened now with this disruptive technology, particularly, the cell phone industry, what it has enabled is give room for young people to be creative and really achieved things which our generation could not necessarily achieve. Thank you.
Thank you, Zano. So I think you actually just open up to our audience, because at the end of the day, this is really a dialogue. We're here to learn in exchange from each other. So it'd be good, from everything you have heard for the last 20, 30 minutes, I would like to open up to our audience to also join the conversation, share some of your experiences on how you see the payment infrastructure, either increasing your business in terms of accessing other markets, or as Zano was mentioning, the kind of innovation that are really coming out of the youth, even the market, because one of the competitive advantage of being in an underdeveloped country is actually we can have a leap when we're growing. So it'd be good to hear anyone from the room that want to share their experiences. And if I don't have volunteers, I will pick someone.
While they're thinking, let me also add that this area is so important to a point where IFC, we've created a separate department, which is specifically focused on that. And in fact, our first investment was in 2011 in Nigeria through InterSwitch. So it's such a big growth area. And there's a McKinsey report which is out there, you can Google it. The figures are mind-boggling. If I were to start a business as a young person, unfortunately I'm not young, it would be in this area.
So my name is Nkiru, and about 12, 15 years ago, I used to be the CEO of a company which was very reliant on payments. And at the time, 70% of our payments failed. This was Spinlet. It was called the iTunes of Africa. And we then went into business with the telcos, MTN being the primary. So we're doing VAS. Remember VAS, when you had to do a VAS thing? And MTN took, I think, 60 to 70% of our profit, because that's just how it happened at the time. This is 12 years ago. So things have really changed now. But still, payments is still a critical issue for most businesses. Payments are still failing. And so I'm sort of like wondering from a telco perspective, but also because Zano is on the panel, and we have a regulator on the panel, in terms of that, how are you seeing what is different now for small businesses? Because payments are still failing, and I would argue that payments are probably the most critical backbone infrastructure for the continent to actually scale.
Do I take another one before Mapula comes in?
Hi, everybody. Thank you so much to our panelists. This was very, very insightful. My name is Mary Adura. I'm Chief of Staff and Head of Strategy at Bella Niger. Okay, so my question is more from the consumer and someone who buys a lot of things from across Africa. I want to know what the future of seamless and universal payments could be for a customer. So I'm Nigerian and maybe potentially I earn in Naira, and I want to buy something from Kenya, for example. I have to buy in dollars, which, as we all know right now, the Naira and the dollar are in a big, fight. So I'm curious about potentially, are there any opportunities in the future that would have some sort of unified, payments, currency system that would be helpful? And is there any role, because this is something I've been looking at more recently, of blockchain in helping, blockchain technology? I know CBN might have something to say about that, blockchain technology in, helping to provide solutions to these issues.
Thank you. Mrs. Mapula, do you want to first come in with the question on telco? And then I'll welcome the father in the house and the son in the house to also respond to the second question from Bella Niger.
All right. No, thank you for the question. I mean, it's an important question because it speaks to the reliability of the ecosystem. Why do payments fail? I think the first one, definitely, it's the connectivity. The ability for payments to be seamless has to be reliant on seamless and ubiquitous connectivity 24/7. And I mean, I spoke a little bit earlier about how we are continuing to invest in our network, not just in terms of coverage, but also in terms of capacity. Because with increased capacity, I'll give you an example. In Rwanda, we have, in the last 2 years, we've reached the maximum capacity of what our threshold in terms of transaction twice. So we had to upgrade our system twice as the ecosystem has evolved, particularly payments. Payments, the merchants ecosystem has increased by 200% in the last 2 years. So we've had to invest in that. So the connectivity, the network connectivity is the first one. I think the second one, definitely, it's really around the ecosystem itself, but not just the ecosystem. I spoke about USSD, something we take for granted. Honestly, it's not the most efficient technology. I mean, I sometimes joke with our minister in Rwanda where it's actually the outlook is to discontinue USSD because everyone understands that it's not efficient. Part of the failure is because of its an inability to cater for sort of this increased capacity. Now, what are we doing about it? I think ideally, more people should move into applications, more people should move into smartphones, which offer a much more seamless experience. But certainly, USSD failures in terms of throughput of number of transactions, because it's capped, is one of the reasons the transactions failed. What we are doing is we constantly increase that capacity. Often, we normally do it around December. Last year, we had to increase our capacity by about 20%, just for that festive season. And then we basically, then adjust it. But, I mean, ideally, things like AI are what should enable us to be able to be more dynamic in terms of catering for that. But that's really the second reason. I think the third reason is the interoperability. I mean, you can think about it. In our kind of ecosystem, we are basically we are basically integrating with thousands of not just merchants, but other fintechs. So at any point in time, you have APIs multiple APIs talking to each other. Sometimes the logic of the APIs conflicts. We've often seen that even with our banking partners, where between a certain bank and another bank, the technology is not seamless in terms of interoperability. And that's why I think the regulator is trying to make sure that, in terms of the switching, it becomes a common language so that you remove that friction. So I think over time, these are, one, through this interoperability, two, through migration to smartphone as well as application, and then, ultimately making sure that these hygiene things are removed in terms of enabling 100% success rate. Our current success rate is about 98%, but even that 2% is a lot because, it creates doubt amongst the user to say, what's happened to my payment? So, it's work we are going to continue working on. Thank you.
Thank you, Mapula. Babatunde, coming to the question from Bella Nature on how to trade and buy and commerce across borders. I think for now, Moniepoint is only focusing on Nigeria. But how can you help respond to that question as part of your expansional plan, for example? And then if you allow me, I'll come back to Rewhaoma. There's obviously a lot of discussion around single currency, especially in ECOWAS region. There's also discussion around, you cannot talk about fintech, cannot talk about digital currency, particularly in terms of intra-trade. So if maybe Babatunde can start, and then you can pick it up from there.
All right, thank you. Let me just explain how deep this problem is. 2 years ago, I was in Cameroon, and I was in an area where you can practically drive like 30 to 1 hour into Cameroon from Nigeria towards the south-south region of Nigeria, right? And I was in this market, and I was speaking to the Association of Nigerians in that market. And the first problem they mentioned is the ability to make payment for goods that they are importing from Nigeria. And guess what? If we don't solve these problems, these guys will solve the problem themselves because they started solving it. Ask me how. There is a guy in the market, and the guy sells nothing, but he's a rich guy. Now, what he does, he sits in the market. If you need to send money to Nigeria, you give him the local currency in Cameroon, he keeps the money. He's got some huge fat bank account in Nigeria, and he makes the payment for you in Nigeria. And the whole payment system, with everybody getting alert that such transaction has been completed, is within 5 minutes. So he collects the money, 2 minutes, he opens his mobile app account in Nigeria, he transfers the money, another 2 minutes, 4 minutes, the last 1 minute, everybody gets alert. Payment made, goods started shipping. Now, payment is all about availability, affordability, and accessibility. it must be so affordable. That's what those guys are doing. They give peanuts here and say, okay, this is the transfer fee. And the guy takes the money, right, and sends the money in Nigeria. That payment system is accessible to anybody. If you want to send to Nigeria, just go and meet that guy. The guy is there, empty shop with AC. He's only waiting for your money to come. And he's collecting his commission. And anybody can access him. And the system is so affordable, available. It is so reliable. Because he's not sending the money across, really. He's collecting cash. It can't fail. Give me the bag. He's here. There's no failure, right? And he opens his mobile app, and he sends the money on the other side. Possibly GT to GT, intra-bank, boom, 1 minute, alert, everybody is fine. Now, any system that we have to create that is going to do this cross-border payment must at least, worst case scenario, meet this 5 minutes timeline and highly reliable platforms. Right. So we have all done well individually in our countries where we have done payment working perfectly in Nigeria, M-Pesa in Kenya, and we have a lot of them around. But what we have not probably looked into is how we can come together and create these payment rails that is going to solve these cross-border problems. Right? It is extremely important. And to be honest, if we can get this right in Africa, we are on a good journey.
Thank you, Babatunde. Rewhaoma, over to you. We have our bodies like ECOWAS. What can they do for the people?
Yes, riding off from where he left off, to actually have a successful regional, or would I say African payment system, the first thing that comes to mind is settlements. How do you settle these transactions? Now, in the country, you have maybe, like in Nigeria, you have a central switch. So no matter how you carry out your transactions, everything ends at one point. You're sure it is treated as it should be. There are standards for security standards, encryption standards. All cards have to apply to a particular standard. So when you now start dealing across Africa, the question you now start asking is, which I know he has the answer to, it's settlement. How do we settle? Where are we going to have the central switch? So that is something which we have to also look at. Because, again, if you look at the issue of relationship, banking is about trust and relationships. Cross-border relationships in Africa is a bit, I was trying to explain to you coming down here, it's easier for you to travel from Nigeria to any part of the world. But traveling from Nigeria to any other African country is an adventure. You know, so that also plays out in our business relationships and payments across the country, but across the continent. But I know it's an ongoing conversation. And then the issue of digital assets. I prefer to call them digital assets. The one challenge we have with digital assets really is the issue of KYC. Sometimes you want to see the person behind the smoke. So the challenge of regulators, you want these innovations, you want businesses to grow, to boom, you want to create employment, but you always want to see where businesses are initiated and where they are consumed. We know that certain central banks across the world have tried to introduce their own digital currencies backed by the power of government or backed by the power of the central banks, because that allows you to treat it like cash, kind of digital currency. So it's just what you have on your system. So as much as possible, I'm aware that central banks have been having this discussion on how to introduce a blockchain kind of digital currency, while not necessarily dealing with the P2P kind of currencies that are kind of faceless, because you know it unfortunately has been a platform for terrorist financing, and it's been a challenge, particularly in the African regions. But again, it's an ongoing discussion.
So as an ongoing discussion, Zano, if you allow me to come back to you, obviously, in all fairness, what the regulator is trying to resolve is the safety, cybersecurity issues, which is also what Mapula was mentioning, that the growth of this space is really going to be fundamentally relying on how safe can we build this system. And when it comes to building system, obviously financing is an issue because you need capital that can actually take every risk. And capital that can take every risk is not capital that is easily available. So IFC, as a concessional financing lender, what kind of blended instrument do you have in place, or do you see this particular space, because it's a niche space, so the usual traditional equity mezzanine debt may not work for it. Is there anything that IFC has developed to be able to finance this stage of building system that will drive payment infrastructure across the continent?
Yeah, sure. So if you look at the blended finance instrument, not just at IFC, but even at AFC or anywhere else, they're designed to serve specific strategic focus areas. So, for example, most of our blended finance instruments are designed for one, to enable inclusion, particularly women and youth. Two, for agribusiness. And three, they are also designed for specific countries, what we call IDA countries, right? You know, the countries which are low income to middle income. So because of that, because of the key role which both mobile operators as well as fintech in particular, that they play in this specific space, they actually are able to access blended finance, at least at IFC. So if I look at some of the investments which we did this year, we are approaching our year into June. Most of them really in fintech have been able to access blended finance because of the underlying sectors which they're serving. And blended finance, the concept of blended finance is that we are required to place our own money at risk at the commercial rate, quote unquote, as well as money which is at concessional rates. Right, so that the weighted cost of capital, when you take the two of them, makes it cheaper for those beneficiaries.
Thank you so much. I think we have so much more to discuss, so much more to learn, but unfortunately, we have exhausted our time. I really wanted to thank my dynamic panel. It was quite insightful to hear from the different perspectives of the verticals that really underline the payment infrastructure development. We all know that to secure the future of the continent as we speak to it, the ability to trade among ourselves is going to be very critical. So, and I hope that in the next sessions that we'll be having today, not only we will be discussing how we can trade more, but actually what kind of products that we can consume in our own region for the better employment of our youth, but also economic sustainability of our continent. So please, my audience, thank you so much for having us, and thank you so much for your interesting questions as well.